97 points higher on the Nifty. Very strong opening.
For our own markets, we're holding up in the green right now as we speak. We have the Nifty sitting with cuts of 43 points at the day's low.
0.25%, 18,159 on the index. The market is going to go home with not quite a three-digit gain, but quite close as well. 95 points higher, 18,214. Banks, of course, were the sort of big reason why that happened.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track the 6 hours of the trading action in just 5 top headlines. I'm Marico D'Souza. Here are the headlines for the day. Sensex and the Nifty hit the highest levels in 10 months as bulls maintain their winning momentum. Banking stocks lead the charge, and the Nifty Bank index closes at record highs. PSU banks report a strong second quarter. Profits grow 50%, loan growth is over 19%. Asset quality also improves, with gross non-performing assets declining by nearly 16%. Britannia posts strong revenues and record market share, but tightened guards for slimmer margins, while Marico reports tighter margins and a weak growth outlook. Bitter pill for Divi's Labs after it fell 8% on a weaker than expected second quarter. Escorts as well lower as it disappoints. They saw a huge drop in margins and some loss in market share. Soda ash prices revised downwards for the first time in 18 months. Tata Chemicals as well as GHCL end mix. TVS Motor ends flat. Some brokerages bet on the stock while others downgraded. Well, here's what we have lined up on the show for you. It's a packed show as always. In Market Voices, we have Dheeraj Agarwal of Ambit Capital. And in Big Corporate Voices, we have Dinesh Kumar Khara, the chairman of SBI, and Escorts Kubota, MD and CEO at Marico. Well, let's start off with the day's market action. The Sensex and the Nifty hit its highest levels we've seen in 10 months as earnings season draws to a close. The banking stocks, they led the rally with the Nifty banking index ending at a record high. Prashant Nair is with us to run us through the market trap. Prashant?
Almost a replica of what we saw in trade on Friday. The market started higher, sold off, was flat for most parts of the day, and then it came alive exactly at 2:30 when there was a big push higher. It was led by banks. And let me explain. So Bank Nifty was doing the better of the two indices for most parts of the day, but it was largely led by public sector banks, which have been doing well. Private banks, not so much. But starting 2:30, I mean, you had private banks which also came into the mix. And, I mean, both these combined doing a lot to help the Bank Nifty and the Nifty as well. Both Nifty and Bank Nifty are not very far away from their respective all-time highs, by the way. It was all about results in the Nifty, large caps or outside as well. What did well, like Britannia, SBI, Bank of Baroda, some of the largest gainers, these were on the back of earnings beats. The two biggest disappointments, losers today, were also earnings-led. Divi's Laboratories and Marico is what I'm talking about. I mean, outside of the PSU names like SBI and Bank of Baroda, there was a whole list of those. Bank of India, Union Bank, Canara Bank, to name a few. Rail infrastructure stocks is a theme we'd highlighted earlier. RVNL, RailTel, IRCON, IRFC, their entire gamut continuing to do very well. And of course, the leader there has been RVNL. In the broader markets, Amara Raja for the second straight day running, NIIT, IRB, there was JK Lakshmi, which did very well. Supreme Industries is coming out of a bit of a slumber. GE Shipping and many more names participating very strongly. Market breadth was positive. There were losers as well, but most of them were earnings-related disappointments. Up ahead, as I said, the markets are not very far away from all-time highs. Tomorrow is a market holiday, but there are U.S. midterm elections in the U.S., which I think we'll watch closely. But the big important cue from a sort of market perspective in terms of data really is the consumer price inflation number for October out of the U.S., which is only on Thursday. Will we get to new highs before that, or will we have to wait for that? That is something which we will have to wait and watch. Back to you.
Well, that's right, Prashant. All-time highs, that's something that the bulls are eagerly looking forward to. Well, here's some expert opinion then. Dheeraj Agarwal, co-head equities of Ambit Capital, said that India is doing relatively better in comparison to the other markets. He also said that they had a target of around 18,700 on the Nifty. Let's listen up.
We've had a target of 18,700 on the market. Although that target was for September 20, September 23, looks like it'll come much faster. I think we are in a situation at this point of time where good news is good news for us and bad news is also good news for us, because relatively speaking, India is doing better. So at this point of time, looks like the trajectory is up. I don't think one should keep increasing targets just because the markets have run up, right? That's like chasing momentum. I mean, it can go a little bit higher, who knows? It's difficult to catch the exact points. Broadly speaking, I personally call this period of time as the convergence, the period of convergence for stocks within a sector and across sectors, which was a period of dispersion between 2014 to 20. So 2014 to 20, the strong kept on going up, the weak kept on getting bashed. At this point of time, we are seeing the strong, if it is very expensive, is actually flatlining or declining a little bit. And what was weak between 15 to 21, but they're showing some amount of earnings traction, is climbing up. So it's more like convergence.
Well, moving to the second headline now. The PSU Banking Index, well, it surged in today's trading session on the back of a strong set of numbers that have come in the second quarter. The index was up 4.5%, and stocks like SBI as well as Bank of Baroda, they rallied anything between 3 to around 10%. These stocks, well, they saw profits growth of close to around 50%, with loan growth coming in at over 19%. In fact, their asset quality also improved, with the gross NPAs or non-performing assets declining nearly around 16%.
Well, Q2 FY23 has been an operationally strong quarter for the PSU banks. The loan growth has been pretty robust at above 19% YOY and about close to 5% sequentially, which means that they have gained market share both YOY and quarter on quarter. So the operating profit growth is very healthy at 18% YOY and about 32.1% sequentially, largely led by the fact, net interest margin has expanded for majority of these PSU banks on a sequential basis, and the trading losses that they had in Q1 has actually reversed for many of them. So PAT is up about 50.4% YOY and about 65.7% sequentially. While the operating profits are healthy, the declining credit costs have actually helped the earnings momentum for PSU banks. So the return on advances that I've calculated is at about 1.35%, up from 0.85% in the previous quarter and up from 1.07% in the same quarter last year. In absolute value, their gross NPA is down 15.9% YOY and about 13% sequentially, and their net NPA is down about 29.3% YOY and 13% sequentially. So calculation does show that their gross NPA ratio is now at 6.5% when compared to 7.5% in the previous quarter, and the net NPA ratio is at 1.65% when compared to around 2% in the previous quarter. So overall, the core provision coverage ratio has also strengthened by 120 basis points on a sequential basis. Back to you.
Thanks a lot for that, Abhishek. Well, we caught up with SBI Chairman Dinesh Kumar Khara earlier today to understand the fine print of their earnings report for the second quarter. Here's what he had to tell us.
We have got visibility of either proposals in pipeline or one which are sanctioned already, awaiting disbursement. So all that is somewhere in the range of about 3.5 trillion plus as far as the corporates are concerned. So I expect that going forward, the kind of availment which has happened from corporates in this quarter will have the visibility of similar availment going forward, because corporates are earlier raising money from overseas markets. Now overseas markets have turned expensive, and with the hedging cost, perhaps it is much cheaper to borrow from India as compared to borrowing overseas. And infrastructure continues to be a major focus area, and apart from that, the renewable energy is another very major area, and the PLI has also started showing good demand. We have got some investments which are likely to be up for redemption in the current year, and it is as high as about more than 3.5 trillion as on 30th September when we have compiled these results, though it is even on the higher side now. So I think we will be in a position to unwind these investments and support the credit growth as and when this kind of a visibility will be there. And apart from that, at a system level also, I think the government, normally we expect that the spending from the government will also go up somewhere towards December, January, and that will also bring in more money into the system, and which will also address the liquidity requirement of the banking system.
Meanwhile, Sanjeev Chadda, the MD and CEO of Bank of Baroda, believes that there is scope for credit costs to reduce further. Take a look.
Credit costs have been trending downwards, and to my mind, there is scope for it to come down further as the residual impact of COVID dissipates. We had guided earlier that credit costs should, for the bank, be between 1.25 and 1.5%, although they are less than 1% this quarter. But there always are uncertainties. So for the moment, we have improved our guidance to between 1 to 1.25%.
Well, the third headline today, Britannia was the star, was up close to 9% after the company posted strong revenues in the second quarter. The company's market cap crossed 1 lakh crore rupees post its numbers. Manglam is with us to run us through the details. Manglam?
Britannia hit a record high in today's trading session. The company reported its highest ever quarterly revenue. The street rewarded it with the market cap actually crossing that 1 lakh crore mark for the counter as well. That's not all. They've continued to gain market share for 38 quarters in a row, and now their market share is at a near 15-year high, and that basically is at its widest point that we've seen as against its second competitor, Parle, as well. If you just take a look at the numbers across all parameters, the company reported a comprehensive beat. The volumes were about 4%. That was the only in-line parameter. However, the street was worried about the way the company's debt increased from 700 odd crores to close to around 1700 crores. But to that, the management clarified in the conference call that the debt was taken only to fund capex because it came at attractive rates of 5.8%, which was lower than the treasury yield of the company as well. In fact, in the conference call itself, they spoke a lot more about all the other concerns that street had, which was one, Bombay Dyeing's SEBI order, which they believe that they have gone ahead and appealed against the court's order. Apart from that, we've also heard the company talk about raw material prices stabilizing, a large part of their new product business doing extremely well. Croissants, for instance, would do about 150 crores by the end of this year. And Rajneet Kohli, who was hired from Jubilant Foodworks as the CEO and ED, will now operate day-to-day management of the company. So that stock did well on account of that. And while Britannia did well, its holding company BBTC, which holds about 50.5% stake in the company, which is worth around 50,000 crores, did even better in trade today. And that's primarily because of the big holding company discount that it trades at. BBTC's market cap is just around 6,500 crores.
We've taken debt, yes. We've taken debt for our Ranjangaon expansion, which was a lot of that in dairy. The dairy plant is almost ready and should be commercialized soon. So dairy, then we've got a factory coming up in Tamil Nadu, a factory coming up in UP. To fund that, and we've got a loan at a very low price. We've got a loan at 5.8%. We are looking at approximately exit rate of about 150 crores, which is, I would say, a reasonable number for a product which has just been launched. The total NPD contribution, it will probably be about 5%.
Okay, that's about Britannia. It looked very good. But Manglam, you stay with us. Marico was the one that was down more than 5% after it saw tighter margins in the second quarter. A weaker growth outlook as well, weighed on sentiment. Manglam, take us through those highlights.
But as far as Marico's numbers are concerned this time around, on a reported basis, they were pretty much in line with what the street was working with. And that's primarily because the company had given their second quarter update as well. However, the management did point out some weaknesses as far as some parts of their portfolio are concerned. For Parachute itself, which is a more mass product, they said that the raw material inflation volatility actually caused them to, take multiple price actions, and as a result of which there was scattered product going into the market, etc. And that hasn't settled, and that has only now settled. As far as the other parts of the business are concerned, we did see some recovery in Saffola. As far as value added is concerned, we did see a bit of a decline out there as well. But the management was pretty confident with regards to the gross margin expansion continuing into the next quarter, and in the next half of this year as well. They're looking at margins between 18 to 19%, notwithstanding the 17% that they've done in the second quarter itself. Importantly, it will be crucial to watch out for how the performance of their growth businesses, foods as well as digital, take the company's growth prospects forward going forward, primarily because they have tall targets of almost 850 to 1,000 crores coming in from food by FY24 and almost 450 to 500 coming in from their digital and premium personal care. We spoke with the management, and this is what they had to say.
Contrary to expectations, the the commodity market, at least as far as Parachute is concerned, continues to fall in a gradual manner, which means that we were always playing catch up with pricing. As a result, our prices have not been able to stabilize in the market. And as you know, that Parachute is a mass distributed brand, therefore it takes 6 to 8 weeks for the prices to stabilize and the price discovery to happen with the consumers. And therefore, we have not been able to get the volumes back, which I believe now is going to happen come around November, December, certainly around December, because now we see the stability happening.
Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking. Welcome back. You're still with us on Markets Today. Let's run you through the remaining headlines that we're tracking for you, which brings us to headline number 4. Divi's Laboratories was down close to around 8.5 to 9% after it disappointed in the second quarter. The firm's margins were at multi-quarter lows. Ekta joins us to run us through with a quick analysis on that. Ekta?
Well, definitely a top-down miss for Divi's Labs this quarter. The revenue was down around 7-odd%. The street was anticipating a growth of around 10 to 11-odd%. Margins were probably the biggest disappointment this quarter. It came in at a multi-quarter low of around 33.5%. The street was anticipating at least some amount of sequential stability, considering that the margins disappointed last quarter as well. So the street was anticipating margins of anywhere between 37 to 38-odd%. This resulted in a double-digit profit decline for the company this quarter. The company did hold an investor call during market hours, so they did state to analysts that one of the reasons probably that the margins were pressured was because of factors such as raw material volatility, as well as pressure in terms of the generic prices of APIs. But they seem to be more optimistic in terms of margin recovery once the custom synthesis business starts picking up. While this quarter's demand was impacted because of a change in product mix, because of a fast-track order when it came to COVID-19 not delivering in terms of numbers, though the street was anticipating that, as well as delays in some projects, they are optimistic when it comes to demand in the custom synthesis business picking up in the next couple of quarters. But that was not enough for the street to be more optimistic or see an intraday recovery. Possibly the street wants to see more in terms of the numbers being delivered in the next couple of quarters before they make that decision. Remember, cash on books also remains strong for Divi's Labs at over 3,300 odd crores.
Okay, all right. Take that. Thanks a lot for that. Well, Escorts Kubota fell close to 1.5%. It reported a weak set of numbers, a big drop in the margins. Well, that's what hurt sentiment. The management said it would take around 4 to around 5 quarters for it to get back towards normal levels. Sonia Shana is with us to run us through the key highlights. Sonia?
Well, thanks a lot for that. We do know that the numbers were weak. The numbers came in on Friday itself. But just to quickly run you through the main reason for the disappointment, it's the big margin fall where the margins were down 540 basis points year on year. Now, brokerages have been very cautious on the stock ever since the numbers came through. CLSA maintains a sell. They have cut their target price to 1561 from 1612 earlier. They say that JP Morgan says that a continued market share loss is a bit worrying for the street. In the first half of the year, the market share has fallen about 40 basis points. The management, though, says that it will take at least 4 to 5 quarters for margins to get back to normal. It's because it's not easy to pass on the higher inflation to the consumers because the rural end of the market is still under pressure and there's a lot of competition. They said although it will take 4 to 5 quarters for the margins to get back to normal, they feel that this is the bottom as far as the margins are concerned. The market share has also gone up marginally in this quarter. Market share is up about 70 basis points and gone up to beyond 11%. However, they also ended the conversation by saying that the tractor industry will not touch double-digit growth this year. At best, it would be perhaps mid to high single-digit growth. So slightly cautious commentary from the management, and hence the stock continues to be under pressure. Back to you.
Thanks a lot for that, Sonia. Well, staying with earnings then, low-cost airline Indigo has its eyes set on network and capacity expansion. Well, the Indigo CEO, Mr. Peter Elbers, in an exclusive interview with CNBC, said that the company is targeting to ramp up capacity by 13 to around 17% by the end of this fiscal. The airline reported a mixed set of numbers in the second quarter. Let's hear him out.
we see where we are today, we made a loss if we exclude it from foreign exchange, and if we were to exclude from the enormous increase in the fuel prices, we would have definitely in a much better spot. And if you see where we are today with travel numbers basically hitting 7% higher than the situation prior to COVID, with load factors in a quarter, which is seasonally weak, around the 80%, and with a yield, which is normally in this quarter going down by 10% as compared to the previous quarter, it's now running at just a 3% lower level. So if you take all these elements together, we see a very solid market development. But obviously, the price of fuel and these rate of exchange, as we just alluded on, had a negative effect. Take a little look forward. We continue our capacity expansion and our network expansion in the third and the fourth quarter going forward. Actually, in the second quarter, we have inaugurated our 100th destination. We continue to expand that network, and we expect to end this year in some 13 to 70% capacity levels higher than the pre-COVID situation. Clearly, demand, as we have seen, remains to be very strong, and that's also why we're taking a lot of measures in order to meet with this increasing demand. Clearly, our priority so far has been restoring the network.
And the fifth and final headline today, soda ash prices have been revised downwards for the first time in 18 months. Two major manufacturers of soda ash, that's Tata Chemicals and GHCL, both of them were in focus on the back of this price cut. Sonal Bhutra is with us to fill us in with more details. Sona?
Thanks a lot for that. Well, GHCL and Tata Chemicals, they'll be in focus because soda ash prices, they have been cut for the first time since 18 months. And it is important for these two companies because they are two of the major producers in the country. Now, soda ash prices, they have been cut by 4% from 37,500 rupees per ton to 36,000 rupees per ton. Yes, it is not a big decline that we've seen, but it is start of a cycle where we are seeing softening of soda ash prices. Now, remember, these prices, they went up almost doubled in last 1 year from 20,500 rupees per ton in June 2021 to levels of 37,500 rupees per ton in June 2022 itself. Now, GHCL in its conference call and conversation to us had indicated that yes, soda ash prices could see some softening going ahead because of some supply coming into the market. From here on, apart from these prices, energy prices are also key to track, because if energy prices, they come down, then soda ash prices will remain at current levels. But for now, first signs of softening of soda ash prices, and these two stocks will be in focus on the back of that.
Thanks, Sonal. Well, moving on then, TVS Motors ended the day more or less flattish. In a bull versus bear case, Nomura, UBS as well as Macquarie, they have a bet big on the stock. While CLSA as well as Bank of America, they've downgraded the stock. Sonia is back with us to run us through details about this bull versus bear scenario that's playing out on TVS Motors. Sonia?
Absolutely. There's a bull and bear case argument on TVS Motor, and I just wanted to put that forth for our viewers. On the bull case, you have Nomura, there's UBS and Macquarie. Nomura has in fact upgraded TVS to a buy. They've raised their target price to 1382. UBS has a buy with a target price of 1355, and Macquarie has an outperform. They've raised their target price to 1260. Now, the reasons are well known. The success of the new models, you've had a very good response to the new electric vehicle iQube. Margin tailwinds are the big positives. Nomura says that export challenges are likely in short term, but the TVS group will definitely outperform. Now, on the bear side, you have CLSA that has a sell with a target price of 932. They believe that the valuations are very expensive after the big run-up that we've seen in the stock. The stock is now trading at 30 times FY24 EPS. BofA Securities has downgraded to an underperform. They have a target price of 1030. Once again, they reiterate that valuations have no room for error at all. Also, the weakness in exports continues to be a bit of a concern. In the EV business, although the business is doing well, initially there will be losses which you'll have to sort of factor into the P&L, and there is competition risk as well. Competition is coming back aggressively in the electric vehicle space, with Ola back at 20% market share. Honda is having a new EV launch next year, and macro headwinds in Africa will continue to drag the market. So there are equal cases for both a bull and a bear. You can take your pick.
Indeed, Surya, thanks for that. Well, moving to the IPO corner then, issues from Bikaji and Medanta. They closed today. Bikaji has seen a strong demand across the board. Medanta has seen strong institutional demand, but retail portion is still not fully subscribed. Yash Jain is with us to run us through all of those details. Yash.
Well, Nigel, for both IPOs, that is Bikaji as well as Global Health, which is Medanta Hospitals, they've received decent amount of investor interest for their IPOs. But I'll tell you what, it's Bujia all the way. For Bikaji, the total subscription received as on 4 p.m. is 26 times. The qualified institutional buyer or QIB category, that has been oversubscribed 78 times. HNI category at 7 times, retail category also at 5 times, and employee category not too far behind at about 4 times. The company is looking to raise about 881 crore rupees through this IPO. But guess what? The demand which it has received is for 66,000 crore rupees. For Global Health, that is Medanta, the total subscription as on 4 p.m. was 10 times. Qualified institutional buyer category at 28 times. Strong subscription in that category. HNI at 4 times. Retail is still struggling with about 1 hour to go, but as on 4 p.m. it was subscribed 83%. The employee category at about 4 times. The company is looking to raise about 2,200 crore rupees, but it has also received demands for 22,000 crore rupees. The price band for Bikaji, of course, is 285 to 300 rupees a share. Global Health is 319 to 336 rupees a share. How much of the strong subscription numbers translate into listing premium? That is something that we'll watch out for.
Thanks a lot for that, Yash. Well, on that note, we'll have to wrap up on this edition of Markets Today. Thanks so much for watching.